Before we get into Bitcoin and crypto's chart analysis, I want to play this clip from Tom Emmer. Um, Now he's in the House. He included this amendment into their budget or their debt ceiling package thing, which is going to the Senate. I don't know where all that stands right now, but I just saw an article where it said, quoting CNN, that Biden plans on signing the the debt measure once it passes the Senate, and I hope this stays in it. I hope that, yeah, if this stays in, this is really, really good. I don't know how the sound is. I'll provide a link in the description. I don't know what this it's going to sound like here, um, but you can skip over it. This is about 5 minutes. And click on the link in the description if you want to hear a better quality of it.
Thank you, Mr. Speaker. Regulation by enforcement is a practice all too common with this administration. This is particularly the case at the SEC and Chair Gary Gensler's approach towards our capital markets and financial services industry, but especially with our emerging digital assets community. My amendment seeks to put an end to Chair Gensler's pattern of regulatory abuse, a pattern that is crushing American innovation and capital formation without undermining our ability to go after criminals and fraudsters. Specifically, my amendment prohibits the SEC from using funds for enforcement activities related to digital asset transactions until Congress passes legislation that gives the SEC jurisdiction over this asset class. This will keep Chair Gensler, who has proven himself to be ineffective and incompetent, in check while Congress continues working to give this industry a chance to grow and develop right here in the United States. Let's just look at the facts. Under Gensler's leadership, the SEC has pursued dozens of enforcement actions against the digital asset industry, despite never finalizing a single rule or regulation for the industry to follow. Chair Gensler refuses to provide the marketplace with clear criteria for digital assets that he would consider to be a security. How can this industry comply if there are no rules or guidelines to follow? On top of that, Chair Gensler has developed a track record of going after actors like Coinbase, a publicly traded company desperately trying to survive and innovate right here in the United States instead of going offshore like so many are forced to do. Gensler has done this while missing bad actors like FTX and Terra Luna. At a time when clear guidance is desperately needed, Chair Gensler instead spends taxpayer resources praising himself for targeting celebrities like Kim Kardashian, while Sam Bankman-Fried was running a Ponzi scheme right under his nose. What's worse is the SEC doesn't even have jurisdiction from Congress over this asset class to begin with. Yet, the SEC has no shame in trying to expand their jurisdiction to swallow and destroy the digital assets industry through regulation by enforcement. Last year, the SEC's Director of Enforcement admitted during a House Financial Services Committee hearing that the SEC pursues enforcement actions on entities that are actually outside of its jurisdiction. One of these extra jurisdictional enforcement cases was the SEC's landmark crypto enforcement case against Ripple, alleging that XRP is a security. In July, the Southern District of New York sided against the SEC, asserting that XRP is not itself a security. In August, the United States Court of Appeals for the District of Columbia Circuit found the SEC to be acting arbitrarily and capriciously in its refusal to approve Grayscale's Bitcoin spot ETF application. And just last month, the Government Accountability Office found the SEC to have created an illegal crypto accounting rule that is actually out of compliance with the Administrative Procedure Act and the Congressional Review Act. The unique characteristics of digital assets make it hard to fit this asset class into any existing regulatory framework. That doesn't mean crypto is up for grabs by whatever federal bureaucratic agency has the most taxpayer-funded enforcement resources to burn. Congress is working on legislation to establish a framework for how we classify specific digital assets as a security or a commodity, which will dictate the regulator of jurisdiction. Importantly, while Congress works to pass this necessary legislation, my amendment will not prevent future bad actors like FTX from being pursued and punished to the fullest extent of the law. The Department of Justice, the Treasury, and the Office of Foreign Asset Control all have the existing and sufficient authority to prosecute criminal acts of fraud, abuse, tax, or sanctions evasion. Some would even argue that these entities have done a better job of attacking fraud and criminal activity in this space than Gary Gensler and the SEC. This amendment is designed to send an important signal, not just to the SEC, but to every regulatory entity in the federal government. Congress will hold unelected bureaucrats accountable. SEC Chair Gensler cannot continue to abuse the powers of his agency to fulfill a political agenda of driving the new and promising digital asset industry offshore. Congress must be allowed to finish its legislative work so the future of digital asset innovation is determined by Americans, not by unelected bureaucrats in D.C. And with that, Mr. Speaker, I reserve.
All right, so write your senators and your congressmen and let them know. Let them know how you feel about this. Okay, it's up to us. Otherwise, this might get passed over. Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index on the hourly time frame. And we're having a nice recovery from the orchestrated dump that I pointed out on the last video. I detailed how manipulators in the market were trying to get us to dump through this red line. You can see the candle here, but in the previous video I went into down to a minute time frame. You can see as we approach the red line, someone dumped a bunch of Bitcoin to get us to fall through it. Same here with the blue line. And it didn't work. We found support on the blue line, continued upward, but they did it again throughout the rest of the day on Tuesday. Now, this is also at 2045. I went all over this in the previous video. It was the at the same time we had that fake FTX news pump. So they pumped the market in order to dump and take that money and continue to dump. And it didn't work. We found support here, continued on upward, but they still put pressure on the market to try to get it to dump through the red line, through the blue lines. These were significant levels that we needed to break, and they were able to get us to dump through these other center lines of various channels that are all parallel to one another. I have a lavender channel at the top here, the bottom here, a red channel at the top here, the bottom here, and a larger white channel here and here. These are all the center lines of those channels. They're all perfectly parallel to one another. They just, whatever. They capture different ranges of the market, and it can be argued that the red channel here, the top of the red channel and the top of the lavender, or the bottom of the lavender channel, capture most of the price action, and these other ones just extend a little bit beyond that. But anyway, I could even get rid of the white one, as I was contemplating doing that. However, the red center line of that white channel was very significant back here, where it's green and red. I grab that. Make sure I didn't grab anything. Back here, where it was green and red, price action just followed right along that channel, specifically right here. So, went right there. It was a very significant level of support and resistance. So that's why I just don't get rid of some of these until, I don't know. seem to play a role in things later on. So currently, what I did say is that I doubted that they would be able to take us below this red channel, the bottom of the red channel here at 35,000. And sure enough, we wicked through down to 34,840. But so we found support on the red channel, um, and are recovering back up. A little bit of consolidation here. You can see we attempted to get back into the blue channel. This is our next significant. Well, we got two significant lines here. This blue one here, which I've gone over time and time again. You got to really zoom out. It's the I'll do that in a second. Anyway, we got the blue channel, and then we have the lavender channel up here, the top of the lavender channel. This is the bottom of the blue channel. We're trying to get back in. Top of the lavender channel, we're trying to bust out of. That's where we've been consolidating over the past few weeks. How many weeks is it really? I don't know. I've lost track of time. Yeah, past few weeks. Um, and then you got some other lines up here, white and green, but that's not important right now. Important thing, we'll talk about those once we get above the lavender channel here and back solid. I expect we'll get back above the blue channel very shortly. Let's go to a weekly real quickly. So, oh my lord, no, we don't want to go to a weekly. Let's go to a daily. We got more lines on the weekly. You know what? Screw it. Let's go to here. So, this is a daily. Currently, you can see we're attempting to get back into the blue channel. Um, and this is the blue channel here with the orange center line. And so I imagine that very shortly we will be at the orange center line at 42,000, sometime this week or next. Um, but in a relative short time period, we'll be back up at 42,000. The reason why is you can just see here, this is where we've traded since January. Well, since actually, wow, way back here. Since November of 2022, we've been trading in the lower portion of this channel and the upper portion of this channel. The center line has acted as resistance or support as we've traded in the upper portion or lower portion or about the center line, like here. This is our excuse me, orchestrated August dump that took us out of the blue channel here and currently trying to get back up in there. Now, that being said, all this price action here uh, actually falls in line with the grander scheme of things in the overall Bitcoin price channel theory that I have, but we're not going to get into that now. Another thing I wanted to look at Bitcoin here. Kind of drew this. This is on a Binance chart because it doesn't have any lines on it yet. But if you look at this flag thing here, usually the flags go the other way. But whatever. here's if you take the pole measurement from here to here, and then a pole measurement, say we break out the next couple of days from here to there, that is just over 42,000, 42.3, something like that. And if we go back here, the center line is currently around 42.3. So this all falls perfectly in line with one another. All right, so I'm going to play you this little clip I made about Bitcoin dominance. Bitcoin dominance topped out October 22nd, 2023. So just want you to have a listen from this little clip here. I believe we have these, we're about as high as we're going to go on Bitcoin dominance. We may have one more little pump upwards to about 53, I believe. There is a chance we get a little bit higher. I doubt it because the altcoins are going to follow. Altcoins are oversold and they're going to be right on Bitcoin's tail. Right around here is where we peak, I believe. And then start heading down, and then we may get a second pump up here, similar to what happened here. I believe we're starting to head down right here as altcoins catch up to Bitcoin. May get a little bit more of a pump. All right, there you have that. So let's see what happened. It was October 22nd. Wait, what date was that? What was the date on that? Yeah, okay, October 22nd. It was right there. It was right there when we were printing that red candle. We did. The next day, October 23rd, we got that one more little pump. And we hit 54. We did hit 54. Came a little bit above where I thought we were going to go. But where have we gone since? Down. So we've gone down. What has the altcoin market done? Total 3. This is on a weekly. Let's go to a daily. October 22nd. Right there. Next day, altcoins pumped and have continued their rally. Currently at the top of the range, we had just a couple red candles, consolidation here, but continuing back upwards. And our target is about 560, I believe. Yeah, around 560. It's a target from our head and shoulders reversal pattern here. All right. So that being said, a lot of people have told you to stay out of altcoins because altcoins are going to bleed against Bitcoin and whatever, the altcoin reckoning and all this other crap. And a lot of other people mistakenly say, you don't get into the altcoins until later on in the bull run and whatever. Well, when we look back, we see a lot of coins that had, 10, 20, 30% gains or rather, if you're looking to make 10, 20, 30% gains this bull run, looking at Solana here, from the bottom in January of 23 to now, it's gone up 6x already. So say you were looking to get a 30% gain from the bottom of Solana and it's already gone up 6x. If you're not in, you've missed that. To get to 30% after a 6x move, it's only going to go up 5% from here to about 300, let's say. I mean, just to give you an idea. So a 30x, a potential 30x move, potential 30x play, if you didn't get in January 23 and you waited until now or later on until the bull market starts, you're not going to see a 30x. You're going to see maybe a 2 or 3x because it's compounding of all this, the gains that it's made before. Same thing here with Chainlink. Chainlink has traded sideways for a long time, however, but from June here till now, oh, it's up 185, which is to almost 3%. I mean, 3x, almost 3x. So, yeah, if you're looking for a 30x from here, from this asset, and you're not in already, you're probably only going to get a 10x, which is fine, but it's not a 30x. Avalanche. From here in September until now. It's about up 130, which is 2.3x already. Say it was going to 20x. Say it was going to 23x. You just missed on 2.3 of that, so you're only going to get a 10x, not a 23x. That being said, if you had gotten in January, let's redo our thing. If you had gotten in something like January, it would only be up well, it still would be up 82%. What is Bitcoin? Yeah, Bitcoin's up over 100% from January. So against Bitcoin, no, it hasn't done better, but whatever. It depends on what one you're looking at. How about Render? Since January, it's up six times, 6x, over 6x. So if you're waiting till now, say you were going to get a 40x off a Render, you ain't going to see a 40x if you're getting in now or waiting until a lot of people are telling you to wait until the parabolic run starts for altcoins. You expect it to 40x from there. If it's going to 40x from there, I'm stoked because I got in October of last year. So if it's going to see some of these things are going to see a 10 or 20x after the parabolic run starts, I'm going to be a pretty happy camper. But that's not going to happen. You're going to see a 3 or 4x from when the bull market starts. And if you don't have these gains now, you're not going to be seeing 10, 20, 30x's on these assets. So